So as you can see here, the last couple of weeks, it's been very volatile. We've had a market crash, basically. You can see the Qs were at 540 in the middle of February 2025, and now we trade down to 400. Now it's over a 20% move in less than 2 months. So what do you use to gauge the fear? And the VIX is your tool for visibility. And you can see you have these massive spikes in volatility when there's fear in the market. So back in the summer of 2024, we had the yen carry trade that unraveled, and that created a massive spike. But you can see that it came back down to the mean very quickly. This is a little different now because we had this significant spike, but it's still staying in this very high range, over 40. That's considered very high on the VIX. If we look at a long-term perspective, you can really get the full context. Like, this was the great financial crisis of 2008. We traded up to a high of 96. And I was trading during this time. I remember this. And when you look at history, it gives you context of what's possible and also something to model off of. So you can see that it was up over this 50 range for almost 2 months. And then it wasn't until March of 2009 when we started to come under 40. So you have these spikes. You had one in 2010, 2011. They're short-lived, though. This was the COVID spike that we had up to 85, and now we had that very short-term spike in the summer of 2024. And this is a little different because it's staying up here for a little longer. So that's the first thing you want to look at. You can look at multiple time frames. We just looked at the weekly. The monthly is also good to give you a full snapshot. The weekly is also very helpful. The daily gives you more of a midterm perspective. And then I'd even look at the 4 hours. So we could be coming back down to 25, 30 range. I think we're going to fill this gap, which happened back in the beginning of April, which is around 21, 22. And that's a much safer range to trade options. Now, what you also want to look at is you want to look at the options chain on the VIX, because the VIX is a tradable security. And you can see you have all these different expirations. So what we're going to do is we're going to take the front week and we're going to look at all of the activity. So you can see the open interest right here. And on the put side over here, you have some pretty significant bets. The 23 strike puts are significant. The 24s, the 30s are significant. And then you have a little bit less up here. On the call side, we have 70,000 at the 60s. And some pretty large bets. So it's kind of even. I'd still say it's certainly weighted to the call side, which means they think fear is going to rise. And if fear rises, then prices normally fall. That's kind of the inversion. So that's the front week. Now we're going to do about a 1 month view. And you can see 1 month out, the put open interest is not as heavy as the calls. The calls, we have a lot of, 60, 70,000, 80,000, like 90,000. This is a lot of liquidity. And you can see that it's at multiple strikes and multiple examples showing that people are making bets that they think the VIX is going to stay a little higher for longer. Now, the third thing I look at is about 6 months out. So 6 months puts us roughly around, let's say August, September. Now you can start to see we got some pretty large bets here at the 20, which is interesting. That means that we got some very large likelihood of it coming back to that gap that I told you around 20. And you can still see that it's lightening up out here. So this, in my quick analysis, this looks like it's going to be a relatively short-lived event. When I say short-lived event, I think this VIX is going to potentially stay up here for a little longer, but probably looking out to third quarter 2025, we'll probably be back in this range, which I think is a very probable range, which I'm seeing right around here. You can see we had the strong support through 2022 during the bear market. It traded in that range for a long time, and it also has a lot of touch points in 2024 and even 2025. So looks very probable that we're going to be staying a little higher here for the next, in the short term, but in the intermediate midterm, we'll likely come back to a more reasonable range for the VIX, which will make it a little bit easier to trade these markets. It's still very lucrative to trade in a higher VIX environment, but you just have to be careful because you're going to have larger fluctuations. So what are some of the strategies that I do? Well, some of the strategies I like is, keeping it simple, looking at the Qs. You can see that the VIX, as it relates to the Qs, the implied volatility, these are definitely higher. So I like to buy long dated, like maybe 3-month options. So say the July time frame, like buying the July 480 calls for about $18. You can see there's a lot of open interest here. Also, the 510s are interesting. But I like buying about a 3-month option, then I'll sell. You can see that the implied volatility is 35% here. And then I'll sell the Aprils, which is a little too short, but definitely the Mays at a little higher. So you get about a 4% volatility edge in this arbitrage by selling options that have a higher implied volatility. It gives you a more of an ability to stay a step ahead. You're selling options that are a little bit overpriced than the ones you're buying. And that's smart business. That's how you trade in a higher volatile environment. Is you don't just buy the options, you ideally want to sell something against it. So buying the 480 Julys and selling the 480 Mays creates a strategic out of the money calendar spread that's within the projected move, a little bit more conservative because the projected move between now and May expiration is 40. We're at 454. So ideally, the market makers are saying that this, the Qs are going to trade up to about 495 or 500 or down to 410 between now and May. So that's how I design my strike price selection when I'm building a calendar spread or looking at a higher volatile environment. Is I want some positive theta, I want a volatility edge, and I want to be able to use the charts and look to give me some type of thesis on direction. And the thesis on direction is we've come back, we had a historic rally, volume is picking up significantly, and we can likely trade back up to this 480, 500 level heading in to the third quarter, which is in July. Thanks so much for watching. Make sure you like and subscribe to the channel, and I'll see you in the next video.